Hey everybody, it's Adam Tracy, and I wanted to do the 2024 update on crypto arbitrage trading and what you need to do and don't do and avoid, or just don't do it all again, right? And as a whole, right, like the premise of arbitrage trading is like price inefficiencies across different markets. And even with, you know, the massive like attraction and volume in just crypto markets, even just Bitcoin, it still pales in comparison to the global equities market, right? Like it's a fraction. I mean, I looked the other day, it's like barely 10%. And you know, while there's greater adoption of crypto and while more people are entering the markets, naturally what arbitrage opportunities exist are going to go away. But what's unique about crypto when you compare it to like equity or even debt or whatever is that crypto in all its forms, right? Whether it's Bitcoin, Litecoin, whatever, can rather easily be reduced to cash and be done so immediately, right? And like you see in the equity markets, they're changing the settlement to 1 day settlement, all that kind of stuff. But even with the provisions related to how broker dealers work, you can never like make that exchange. And knowing how a lot of crypto arbitrage opportunities work, it requires the involvement of actual fiat currency, right? And I can't take, 20 shares of Apple Computer and go to a kiosk at the mall and walk away with, 20 grand. Like it just doesn't, that's not how it works, right? You can't do that. So crypto is unique in that sense because there should be like this sort of steady stream of new arbitrage opportunities, and there are, right? But it's getting not so much less ubiquitous, but more difficult to necessarily spot, right? Because you have other options. Not only is it that more people are entering the market, but transaction fees, which a lot of these arbitrage opportunities rely upon, can be overcome through things like Solana Pay, Circle, uh, path payments, however you want to look at it. So a lot of the windows close, right? And sometimes they reopen or sometimes they just go away forever. So the question becomes like, how do I do it? Well, one, you got to find the idea. And like, I'm not here to tell you what the idea is because if I knew it, I wouldn't be talking to you. I'd be ostensibly just working on the arbitrage. But just knowing this from people I've worked with and stuff like that, it's almost cross border, right? And the emphasis is entirely upon imperfections, like price imperfections. And I would say 40-50% of them involve unregulated nations, like where crypto really is sort of the Wild West still. And a third of those are probably, germane to cash transactions, like fiat cash transactions, where you're like selling Bitcoin, receiving cash, turning that into something else, and sending it elsewhere, right? And obviously, with cash payments, there's always like a discount to market, right? Like people, or a premium to market rather. So in the sense that you can get there, sell your Bitcoin for, spot plus 5-10%, send it to an exchange and sell it and lock in some amount of profit. Now, obviously, to do that from a cross-border context involves people, limits, all sorts of things, right? And it can be cumbersome and it can be costly because unless you're in one of these jurisdictions, right, particularly like South America, you just really can't do it without partners, right? Like, so that you start slicing it up. And again, like these arbitrage, these windows and the profit you can expect to earn from it gets smaller and smaller and smaller. So how do you stay compliant, right? Like that's really the question. Well, in the US, right, as a general rule, it would require money service business registration, right? And has for a long time. There is an exception that was sort of promulgated under like just by rule, not by like law, act of Congress, that trading for your own account, right, where the crypto comes to rest, which is like a legal term for literally like you take title to it, exempts you from money service business registration, right? And that's solely in the context of like crypto, right? So like if you were operating, effectuating some kind of arbitrage that almost as like a broker, but you took title and then like flipped it and then took some percentage and fine. Like you wouldn't necessarily need MSB registration. Now, obviously, what controls that like delineation and like definition of what you're doing is your arrangements, ideally written with the people that you're dealing with, right? And that's how that kind of works. Now, if you introduce like fiat in any way, shape, or form, all bets are off, because once you deal with cash, right, you start triggering all these different obligations and the money never comes to rest, right? So, while, and I am going to speak about this in a future diatribe, cash isn't illegal, but it's not preferred. So if you're really going to find these arbitrage opportunities, they almost always deal with hard fiat currency, whether it's dollars or pesos or whatever. But if you are in any way, shape, or form touching that, right? If that's how you're making, that's the nexus of the transaction, whether you're here, there, or whatever, right? Then you may want to look at MSB registration if part of the transaction is routed through the United States, right? Even though like you may be the one orchestrating it and you don't necessarily, it doesn't go into your account or whatever, it's a totally different concept of what value comes to rest, like crypto versus fiat, right? Whether it's in a bank or whether it's in your hand. Totally different concept, broadens the requirements to be registered, gets rid of the exemptions to be registered as an MSB. And on top of it, right, because again, as I've said multiple times before, MSB registration, it's all about just subjecting the company that's registering to Bank Secrecy Act rules, which is the US AML KYC regulation, right? Everything that falls below it. So now you're dealing with the requirement to collect AML KYC, right, from everybody you deal with, right? And it's not even just KYC, it's KYCC, which is very difficult to do, especially in crypto. And that's why you see so many exchanges, pushing back on that, which is a whole nother story for another time. But you will have all these requirements, right? And I tell this to people, it's like, it's no big deal, right, to necessarily do KYC from like an ongoing compliance standard, right? Like you just get the information, run it through some sub or some provider, they're clear, good, you're gone, right? But there's no ongoing reporting unless you have some suspicious transaction, which is a bit rare when you're just dealing in crypto. But when you start dealing with like cash, right, like hard cash, now you've got SARS reporting, CTR reporting, right? You've got all these different requirements that trigger that, even as a crypto exchange, right, like a Coinbase, doesn't file CTRs because they don't take cash, right? If you're your local check cashing store, you may file them all the time, right? Your bank files them all the time on you, whether you know it or not. So my point is, the regulation isn't changed, right, in terms of U.S. persons and MSB registration. It's just that the nature of these arbitrage opportunities, from what I'm seeing, and this is all very anecdotal, is that they tend to involve more cash than they did in the past, right? And so for that reason, you're not going to exist under some exemption where you could just say, well, if I buy, 1,000 Bitcoin on Coinbase, but I have access to a crypto exchange in India where there's a price inefficiency and I can just exploit that all day, that's not the same thing, right? So I guess it's more of a warning, right, than anything else. Like the law hasn't changed. I think just the market's evolving, and so the bigger arbitrage opportunities probably require a deeper dive into what you need and need not to do, and obviously all subject to where you live. So if you have any questions, definitely hit me up, adam@adamtracy.io. I'll chat to you next time. Cheers.